So I get asked sometimes, why don't you interview some famous people on your podcast, Carl? So so that's what I'm doing today.
Oh, who is it?
Yeah, yeah. So I came that close to having Damon John. So a friend of mine, I'll give you a little fact. So I'm talking
Yep,
with Brian Stevens of Mortgage Shots, a longtime friend of mine. So a buddy of mine. So when Damon John, brilliant man, by the way, um, when he buys something on the Shark Tank, he's not the one actually buying it.
really
Yeah. So my friend Perry Belcher is. So Perry is standing off camera, off to the side, and he's even either given Damon Johns a thumbs up or a thumbs down because he's the one that's actually doing the investing and he's the one that's actually going to be working with the person.
interesting.
Isn't that
I saw
interesting?
I saw Mark Cuban. Somebody asked him if he ever made money on Shark Tank, and he said, "Yeah." He goes, "I have two products. One was the I think they're called man wipes. I've never heard of them, but that company is going public. It's gonna there's $100 million, and his investment was $200,000 going into it. And he had another one that was some drink, like a Gatorade type of drink that they drink
Okay.
on college campuses, and that thing right now is valued at $1 billion. He goes, "Oh my God."
Wow.
Those two products. He goes, "We're killing it with it."
Wow. I guess you don't have to like every, and that's true in our business or in the loan officer world. Every meeting doesn't have to be successful because you'll run into those one or two that changes everything. Frankly, Brian, that's me with you.
Yeah.
When we first met, it was just for me, it was just yet another meeting, and for you, I'm sure it's the same thing. And come to find out, gosh, here it is. I don't know, probably 20 years later, literally
Yep.
and that was a very fateful day. It certainly was for me. It was very very helpful. And so anyway, hey, so I want to do something different. So like, and we did a slight version of this on your show about a week or so ago, something like that. Mortgage Shots, which gets emailed to me every morning. And by the way, remind me at the end if people that aren't get that registered, how they can listen into you. But anyway, so on your show, you interview people. So probably 80% of the time you give I don't know, like a monologue kind of thing, very, very interesting. And then I don't know, once a week or once every couple of weeks, something like that, you interview somebody. And I thought, nobody ever interviews Brian. And what uh, just an incredible source of information. And you always have that funny way of putting a twist on things, that it looks a whole lot different at a different angle. So anyway, so I thought I'd interview you here a little bit today. So that's what we're going to do here a little bit.
Thank
So
you. Love it.
yeah, yeah. Hey, so by the way, you know, um, what do you find what do you find more exhausting? Doing five shows every single week, God, for the last, again, I don't know, 20 years, something like
Yeah.
that, or explaining to your friends what you do for a living.
Oh my God, that's funny. Um, Writing shows is so research and writing a show every day for 20 years. I've said this. I've written War and Peace 20 times over.
Mm,
But I've gotten so accustomed to doing it that not doing it is more foreign to me than doing it.
mm.
It's just I don't know what I'm doing if I'm not getting up in the morning and researching and writing shows. And in fact, when we have like long vacations, like we disappear. My family does for the 4th. We go up the coast to this little peninsula up in Washington, and our extended family goes there. And it's all from my wife. We've done this for 30 years now, and it's great. But that's like 5 days off. And on about the fourth or fifth day, we become just accustomed to that lifestyle. So getting back into writing shows becomes difficult for a few days. It's harder not to write shows than it is. When you're writing shows every single day, it becomes second nature.
Yeah.
Me and Frank, we went to Hawaii one time. We took our families over there. By the way, craziest story in the world. But me and Frank were doing like coaching calls in the morning. And but like that whole Hawaiian lifestyle is really kind of hard for me to deal with. You get over there and I'm like, is everybody on Prozac? I'm like, what is going on here?
Yeah.
And then after about 4 or 5 days, you're like, wait a minute, I can get used to this.
Yeah. Evidently, there's Prozac in the water.
But yeah, I think so. But getting back in and like just having that rhythm
Hmm.
Having a rhythm to my life is really a lot easier. When I get out of my rhythm and things that are customary to me is when like things break down.
Yeah.
I actually like it. What I'm trying to do is I'm trying to create more rhythms in my business.
Mm.
But what you have to do is you have to work at that and you have to make it customary. One of the things I did, Carl, and I'm pretty sure you guys do similar stuff, is I have a group of people where we do our warm calls and our
Yeah.
calls, and
Yeah.
we do these on Tuesdays and Thursdays from 10 to 11. Now, when we do them, there's 5 minutes of jockling and talking or 10 minutes, and
Yeah.
then in the last 10 minutes, we kind of figure out what's going on. So there's really only about 30, 40 minutes of calls. And in those 30 or 40 minutes of calls, um, because I'm now actually participating in the mortgage business as I'm trying to build a mortgage business, do as you say,
Yeah.
everybody's in the foxholes together. I found those 2 45 minutes the most successful of my origination business. I pick up a realtor every single time. And no joke, every single time. And I only go after agents who have recession-proof businesses. Now,
Mhm.
if it weren't for the fact that I had to start that thing to get other people to show up, I probably wouldn't do it. I probably wouldn't do it. But because I have that, and that is starting to become rhythmic in my life. Now it's like, wait, hold on a second. It's 10 o'clock. We got to do this. And by forcing myself into that situation has become huge. It's the same thing with my business. It's like if you go to the gym, we all know this, and for the first time and you lift weights, for the first couple of days, your muscles are going to be sore, but then you kind of get used to that. You get into that rhythm. It's the same thing with our mind too. I mean, I went through calculus and number theory when I was in college. And my daughter's trying to ask me like general math questions. I'm like, I have no idea. It's because I've allowed that to kind of, to petrify in my head.
Yeah.
So rhythms are really good for me. And so it's probably writing the show is easy. Explaining what I do for a living is my son said one time, because my dad's a YouTube movie star. When this was years and years ago. And I'm like, well, all right, maybe,
That,
maybe.
that's actually probably a closer. I've never heard that term before, but that's very appropriate. I would say I would say I would guess. I never thought of it this way, but I would guess by far more people do get their news from
Oh.
YouTube than they do NBC, ABC, CNN, Fox, or probably all those people combined. Uh,
I think the boomer generation is the last one that is really trusting, the sources that we have with, our major networks. I find I really, if I'm looking at this, I've cord cut. I didn't intend to, but I'd rather watch a show without commercials.
yeah,
And, I'd rather get information, from my different feeds, my Reddit feed, my Twitter feed, my YouTube feed. I don't think people are, I think when we look at what's going to happen 10, 15 years from now, I think the networks are done.
yeah. I think so too. I think they're yeah. I think probably YouTube or somebody like that's going to buy them all out and probably buy them, at pennies on the dollar. Because
Oh,
that's probably what they're worth is pennies on the dollar. So, hey, I got a question for you. So, you've never really been shy about, and I asked you a question kind of like this on your show, but you've never been really shy about calling out the industry, so to speak.
right.
What's one thing that drives you absolutely crazy right now? Like if you were the king of the mortgage industry for one day, what's the first thing you'd outlaw?
I don't know about outlawing, but like the division that's taking place, particularly in the brokerage space between UWM and Rocket Mortgage. We have two major players over here, and what they've done is they've really created a vision of you're either in or you're out with me or you. And I frankly, I think some of the jockling that's gone around, particularly online, has given the mortgage space kind of a black eye. And I spoke with Dave Stevens a couple of years ago, and we were talking about this, and he didn't want to make it public, but he said, he goes, you're a steward of that position when you're in top place. You don't own it. And what do you do when you're a steward of that? Do you create division or do you create unity? I think right now that our industry's gotten kind of a black eye for all the wrong reasons, with a couple of players who are working against each other. It's very interesting that you have billionaires on either side of this equation right now. And they think each other is absolutely horrible, and the brokers who use them is very horrible. It's kind of like politics today. The politicians are up here making tons of money, And yet we see division on the streets between people who fundamentally want the same thing. I kind of see a lot of that in the industry right now. And I think it's time for loan officers, and mortgage brokers to really understand that we're all going after the same thing. And when we do something good for a client, it helps me. If somebody down in Florida who's a mortgage banker or mortgage broker, doesn't matter, does a good job with their client and follows up with them, it's going to reputationally help everybody or hurt everybody. And I think right now we're seeing a lot of that division, and I just don't understand why. And frankly, if anything, it just seems to be manipulation by people at the top.
I think it's manipulation of people at the top. They're trying to make a buck. And
Yeah,
they make a buck when there's that division. That's what I think. So you want to hear something weird.
yeah.
So as we're recording this, it's April the 2nd. So I think this is probably going to go out on Saturday. Well, we have two episodes go out a week. I think it's Saturday. Anyway, um, so it's April the 2nd, Wednesday, at the time we're doing this. So UWM has sold either all or much or good portion of their servicing rights
Oh,
to Mr. Cooper,
yep.
right? And
And
then Mr. Cooper has just been bought out by Quicken. And
right,
so all this division of UWM with Quicken, and now UWM has sold all, some, or most of, or good portion of their servicing rights to Quicken.
right.
And so so it's just, I don't know. It's
In
just,
a $9.4 billion stock swap, where Rocket's loan value went down by 20%, something to the tune of 20%, and I believe it was Mr. Cooper went up by 9.4%. I just covered this on our show today, and interestingly, the Philadelphia Federal Reserve just came out with a study, and the study said that they have found rampant mortgage fraud um, in their non-owner occupied properties. It's like everybody woke up one day and said, "Oh my God, there's fraud everywhere." Like we didn't collectively get together and decide that we are going to do fraud. What's happening is the Fed, like HUD, like the FHFA, like the GSEs, they're positioning themselves for a correction in the market, and they don't want to be blamed for it. Okay, and so what
mm,
they did is they found rampant mortgage fraud. What that tells me is they're going to look at every default or every delinquent loan, and we know that FHA loans are up to nearly 16% defaults right now. They're going to
wow.
start looking at these loans, and they're going to find reasons to put this on the shoulder of the people who wrote those loans. It's going to
Mm,
be the mortgage brokers. So I think that's one of the reasons why UWM would offload their servicing. They don't want to be a part of it. But then you have Quicken over there who's picking that up. So they picked it up for a king's rant or for pennies on the dollar. So was that the smartest move in the world, or was that the worst move if we expect to see finger pointing take place when if and when the market corrects itself? The Fed coming out with this paper is very, very interesting on the timing. This move that they made is very interesting. We're talking about titans with billions and trillions of dollars in servicing portfolios. This thing is massive. So did you offload a liability or are you onloading a liability? Which one is going to play out and work better? We don't know that. But what we do know is that when you look at every government agency, they're all quietly talking about a correction in the market, what you're seeing down in Florida. Um, does that make sense? Well, I kind of think it does. I had this great graph that I can share with you. It shows the yield spread inversion going back to 1980. And of course, when it inverts and it goes negative, there's a recession every single time. And the recession is proportional to the drop, right? Now, the drop that we're facing right now is the biggest drop we have ever seen going back to 1980. And this one almost looks like clockwork, Carl. So are we going into a recession or a correction? And I think the answer is, well, we kind of have to be. There's one of two things. If rates dropped by 4.3% from where we currently are, so I think your conventionals are sitting somewhere around 6.5%, your govies are at about 6, somewhere in that line. If they drop by 4.3%, think what that number would be. It would put rates back down into the twos. That would take us to pre-pandemic levels. If property values dropped by 47%, we would be at pre-pandemic levels. If that like these numbers, it's all of these things. What we did was when rates were down to the twos, we saw this in Japan in the 1980s, not to get in the weeds on this, but what happens is value doesn't come down when you drop rates. People, if you have significant demand, what happens is we will bid our price point up to whatever the value is. And then, of course, when rates go up and values don't go down, we create a market that becomes unsustainable. So, and that's kind of where we're at right now. We're finding people, I think the median sales price on a house is like $475,000 across the country. And I like to say that includes North Dakota and Mississippi. I
Yeah,
mean,
I
so,
agree.
like in areas like Florida and California, we're offsetting that curve. And your median income across the country is like $43,000. Like the average person can't buy the average house for the first time in history. So if there is a correction, and if we look at the curve inversion, and then we look at the actions of the Philadelphia Federal Reserve and the words of the FHFA, yeah, I think they see what we all kind of know is coming, and they don't want to have that on their shoulders. They got to
Mhm.
make sure they point fingers at this stuff. Now, you also remember HUD found a way to offload billions of dollars in portfolios of loans that they believed that they were going to have to pay take money from their mutual mortgage insurance fund out. Now, their mutual mortgage insurance fund right now is sitting at close to 8%. It needs to be at 2%, but that is 8% of their entire portfolio. And they've never held this much money. And everybody has called for them to pull money from their MMI account and lower mortgage insurance rates on FHA deals to
Mhm.
bring back affordability, and they're not doing it. Why aren't they doing it? Well, they see those dark clouds on the horizon. So the move that we have right now with from Rocket and Mr. Cooper and UWM, I think that's really part of the bigger picture here. What's
Yeah.
going to happen in the next couple of months?
Yeah. It's gonna be it's gonna be an interesting journey. Hey, I know you keep pretty brushed up on what's happening in Washington also. Is there any one regulation or government policy that's kind of flying underneath the radar that could have a big impact? Anything that you're aware of that's flying under the radar right now?
Not really. I mean, everybody knows that the CFPB has been gutted. We
Yeah.
we know that. The fact that we have Pulte right now is, part of the president's cabinet. I think for housing, it's turning out, it seems fairly positive.
Mhm.
We haven't seen any drastic changes taking place there. Um, I think there's a perception that Washington is kind of asleep at the wheel with the Trump administration, that they're not going to enforce anything. And they haven't made any moves to suggest otherwise. But I really caution folks, with your business right now. It's even if there's a belief that, we might be able to cut corners, there's still a number of different regulatory agencies, the federal government, of course, tort attorneys everywhere, looking to find ways to go ahead and, make rain. Writing clean loans is, I think, vitally important now, as it's always been. And somebody told me before, when you go back to like 2008 and you think of who the big players were back then, they're all gone. All of them. Every one of them, they're all gone. And in fact, we have replaced those with like new players today, like UWM. 10 years ago, I mean, me and Frank were working with those guys. They were in 6 states. They weren't the company they are now. At that time, Rocket was actually sold. Dan Gilbert didn't own them at the time. He sold them again, pennies on the dollars, and just and bought them back and made a huge fortune on that. But the biggest players that we have today are fundamentally new. I think what's interesting about this industry is the nature in which it recycles itself, because it's so fluid and dynamic in terms of what we have to do, people like me and you, um, that we get stuck in our ways and we're not capable of evolving.
Mhm.
I think right now, I think the biggest thing is to creatively look at your business and folks around you and find ways to crowdsource to figure out how to stay ahead of the changes in front of you rather than getting comfortable in the old ways.
Hey there. Hey, if you're loving the tips so far, be sure to hit that subscribe button right down there and then tap the little bell so that you never miss out on more free cool tips coming your way. Also, I would love to hear from you. Drop a comment beneath there. Let me know what you think or tell me what you'd like to hear next. So, in that line, do you think AI is going to change the mortgage world, or do you think it's mostly hype?
A little of both. It's like everything. We get so enamored with things. AI. It's like the South Park episode where your AI is going to talk to your AI and they're going to regurgitate each other's information. Rather than artificial intelligence, I'm a big fan of like actual intelligence, the human intelligence. That's kind of me. Now, there very well could be this. I've gotten too old and everything has passed me by. But what AI can be used two ways. And it's just like any type of technology that we use. AI can be used to enhance you, or AI could be used to replace you. And as a loan officer, I want something to enhance me, not to replace me. What is an example? Our a deafening like dependence on CRMs. Now, is the CRM a good thing or a bad thing? Well, it could be a lazy tool where you think
Mhm.
spamming people is just the greatest idea in the world. You get this huge list and these grandiose ideas, and I'm gonna drip on these people like I I'm gonna drip on you. Carl, think of those words. Do you want to be dripped on? You know,
Yeah, no.
no, it's ridiculous. Now, if we can use AI to maybe clean up some of our scripts, to like you could actually with AI, you could type in anything right now, a chat GPT, I forget a deep C or whatever the Chinese one is.
Yeah.
You can type in any type of non-QM loan. It will give you all the underwriting guidelines. It'll get you how to sell them. Like, and then you can go out there and be a part of it and participate. So it
Mhm.
kind of works like a shortcut, but I think we have to look at AI just like we look at any form of technology. Does it enhance or does it replace you? And, on the files that I'm dealing with right now, I got a cop with a crazy, wife who won't sign a claim, who owns three houses. Nope, he owns four houses. He's going down to Southern California and he's, working with A&E and he's picking up two jobs. He's losing one. Oh, he's gonna be the sheriff again. And it's like everything is so, I don't know how AI could figure out this story because it's so remarkably unique. How many loans do we deal with that you have situations that are so incredibly difficult? I don't think AI's got the capability of doing that, and I don't think it's anywhere close to doing it. When it comes to your rate and term refinances, in those markets, sure, it's probably going to have a place in that, and sure, it's probably going to hurt our industry, but I don't think it's going to hurt it as much as people fear of it. It's like this. Remember when the travel agency, the travel agency, my grandparents, they owned a travel agency. And then, we found Travelocity when like the internet was starting to blow up and, the travel agents are gone. And it wiped them out with the exception of a handful. And what we discovered is even 20, 30 years later, that if I'm going to fly from California, maybe even all the way down to Tampa, I'm going to go to Travelocity or I'm going to go to Southwest and I'm going to go get my ticket. I might use a broker, I might not, but it's going to be the cheapest. That is the value structure. But what they discovered is that if I was going to go on a safari or I wanted to go to Nepal or Australia or go to Europe and do a trip there, and I had a big ticket purchase, that even the Gen Xers, the Gen Yers, the Gen Zers, the betas, the alphas, everybody was going through some type of broker, some type of agency to do that. Because I can't screw up a trip to Tampa, but I
Mm.
might screw up a trip to Europe. And so I wanted to go there with somebody, an individual, an actual person who had the faculty of ensuring that my huge purchase was going to be worth it. So when AI comes into our industry, I kind of think we need to look back to what happened with the travel agency. You as a loan officer, or you, in fact, as a real estate agent, have to show your viability and your importance in that transaction. If we can go ahead and make that transition, there's never going to be an issue with AI.
Yeah, I think the one of the saving graces we have is is that we're licensed by the state, not federally. And so you'd have to have 50 states to all agree that a non-licensed machine has the capability of doing loans. And I think that might be one of our that we're not federally licensed, but state licensed. I can't see putting 50 governors and 50 state legislations in a room and agree on do they want 2 cubes of ice or 1 cube of ice.
Right,
And
right.
so something of this nature, I think that's going to be our saving grace for quite some time. I can see it replacing, frankly, underwriters and processors
Yeah.
uh, first. But it never ceased to amaze me. Man, I've been thinking this for the last 10 years. It amazes me that and I think we talked about this, Fu and I talked about this before, that Walmart, Amazon, Zillow has not been able to replace the loan officer. And these some really, I mean, you talk about Bezos with Amazon or the Walmart family. I mean, these are some really smart people, and they know business, you know, better probably than anybody, like literally.
I agree.
And they couldn't pull it off.
Right.
In fact, it's been a catastrophic failure every time they've tried. And I've noticed recently, hadn't anybody been trying? And I think the last, when Zillow tried to replace the realtor, they got such a spanking on that. I really think it reset the bar in the industry, the thoughts of even thinking about that. So yeah, it'll be interesting. I do think I think it has a place on over in my over on my side with my mortgage branch. We have it so an AI, the loan officer has an option that AI will answer their phone for them, and it's pretty remarkable. Like it'll is this a new loan or is this a new loan or an existing loan that you want to you have a question with, and then if it's a new loan, I can either set you an appointment up with loan officer Brian, or I can send you to a link where you can start to fill out the application online. Which would you prefer? And so it's a pretty amazing thing. So
Well,
I
right,
think,
Carl, that is exactly what I'm talking like enhance or replace. So
yeah,
what the scenario you're telling me is that's creating an efficiency for the loan officer.
it's
An
exactly what it
efficiency for the
is.
loan officer is where you need to be.
Yeah.
Somebody who's going to go out there and market and take the loan, the enhancement, like that is an efficiency. That's exactly how AI should be used, and that's how it can make that loan officer more successful.
Hmm.
So,
Yeah.
I mean, how many times have you found yourself on a 25, 35-minute phone call, and God, when I was writing loans before, I would go into work, you have 35 messages.
Ugh, yeah.
Okay. And then it comes down, there's 20. And then by the time you respond to those 20, you go check, you've got 35 messages. It's like, ugh,
Yeah.
like you can't get ahead of it. So that, like what you're telling me that what
Mhm.
you guys are doing with AI, that's creating an efficiency. That's an enhancement to the loan
It,
officer.
you know what it is? It's and it introduces itself as Carl's AI assistant or Brian's AI assistant. So it doesn't try to hide the fact. So
Good.
when we first started this thing, like mine had my voice, so they just recorded me for 2 minutes,
Yeah.
and God, it was pretty freaking good, you know. And I said, you know what? At first, I thought that was a good idea. And I thought, that's probably a really bad idea,
Oh,
but because I don't want anybody to think, wait, is this the real Carl or is this the AI Carl?
oh,
And yeah, because I don't want them to not know.
that's a
And
good point.
yeah, so how I'm doing it is if I don't know if this is the right way of doing it, I might cut this out of the podcast, but I think it's the right way to do it. If I'm a guy, I'm gonna have a guy assistant, and if you're a lady, I'd recommend a lady's voice but not your own as your assistant. But anyway, hey, I got something that I've always wondered. Like, so, dude, but you have done so many shows, and like you said, you wrote War and Peace 10 times over. How do you keep it fresh?
Just it's repetition, it's redundancy. But I think to answer your question, what you're looking for on this, it's a discipline. It's just a discipline. It's again for so many years, decades of doing this. I have my I don't even know what I would do with myself if I didn't have all my different feeds and information to look at. It's how I spend my spare time. What I kind of enjoy to do. People watch TV. I'll read articles. I think probably that more than anything else. Um, but how do I keep it fresh? I heard somebody say one time, I want to say it was Jon Stewart, and he said, "Well, he goes, I just look at the absurdity in politics,
Mhm.
and I just point out the absurdities, and business is always good."
Mhm.
Kind of similarly in this industry, is I try to point out like the absurdities in our industry, and there's always something new and absurd, and business is always good.
Mhm.
So, and because we change, maybe it's not absurd. There's good things and bad things, but our industry, when you micro focus on it, has so many things going on at any given time. In fact, Carl, it's not about like how do we find information. It's like what is the information I get to pick and choose today? It's there's always 20 stories. We have to kind of jam it down to two or three. Um, If we had something that was more static in nature, yeah, it would be difficult to talk about the same thing. All right, well, here's a piece of wheat bread. Here's a piece of wheat bread again.
Mm,
And today we have wheat bread. But our industry is constantly, constantly changing. And because that, like for writing a show, business, like I said, is always good. But you
mm,
have to be kind of tied into it. You have to really be and once you start looking at it, so for instance, my Reddit feed right now is exclusively, you know, uh, econ stuff, real estate stuff, loan stuff, borrower stuff. And so I can go on my phone at any given time and I'm getting 25 threads a minute. And my Twitter feed is, everybody who's associated with housing, and so at any given time, I get another 25 a minute there. And even like my TikTok, it understands your algorithm, what you're doing. And because I'm always looking at real estate and lending stuff, there's a ton of stuff there.
yeah, I like that. Hey, I need to start wrapping this up a little bit. I want to be respectful of your time. I know you got a lot going on, and we have, as we're recording this, we have the state of the mortgage industry address coming up here in about an hour and 10 minutes. So I got to go sit get my other set. So I've got this Oval Office set. And I'm going to go try that, and I'm trying to cheese this up as much as I can, you know.
Well, I'm going to be there.
Yeah. Um, what's next?
What's like in the mortgage space?
Or for you? And I don't mean like what's next different. I like what's yeah, what's not that you're going to stop what you're doing, of course, but like what's the next thing on your agenda?
So my absolutely incredibly fantastic 17-year-old daughter is about to graduate from high school, and she will go straight to a 4 year. And that means for the past, my God, blink and it's over. My past
Mm,
28 years, 30 years of raising kids is
yeah.
going to be over. I'm going to have three independent kids, one who lives down in Florida in your neck of the woods, in Naples, one who lives down in San Diego, and my youngest one is probably going to New York. Me and my wife now have 30 years. Met her in high school, still married. We have an opportunity to go ahead and be gypsies, and we'll probably do that. So
Mm,
what's next for me is though we love where we live, and we didn't intend to raise our family in Vacaville, California, but like I said, you blink in hindsight, it's what we did. We have a great community. We love it here, but we also don't want moss to grow on our feet as we turn corners. So I think what we're going to do is I think we're going to um, move to different locations and stay there for a few months and figure out what we think about it. Because I can shoot my show from anywhere. It doesn't like I can do whatever I do. I can
for
do my
sure.
phones anywhere. And
Yeah.
so I think what we'll do is we'll probably end up going up to Washington.
Mm,
We'll probably end up going down to Florida for a few months. There's a couple, certain areas like in Montana that I think is absolutely stunning. Um,
mm,
so I think what we're going to do is we're going to not mourn the fact that our kids are gone because you don't know how to live your life when they're gone because you spent the last 30 years raising kids in some capacity. I think we're going to do a little bit of that. And I like the idea because I think it will enhance what I do. And I mean, this, Carl. I don't know if your wife travels as much as you have or you do, but all those years of traveling, I mean, I've seen every state, every city, everywhere. And I always have somebody who wants to show me how great their town is. And that's kind of a neat thing. I remember one time we went to Bismarck, North Dakota,
mm.
and it was February. And I mean, it was like
Oh,
25 below.
brutal. Brutal.
And,
Yeah.
and I look over at Frank, I said, why the hell did we agree to this? He goes, we did this in June. I'm like, oh man. So we get off, and this guy goes who picks us up. He's like, "Hey, how are you guys doing? I can't believe you're here." And I'm like, "Oh, this is wonderful." I'm like, and it's worse. It's worse than Phoenix when it's 120 degrees. It burns more than that. It's horrible. And he goes, "Hey, man," he goes, "Do you want to try our fried pickles?" And I said, "No, no, no, not really. Just I want to go to the hotel. It's a long flight." He goes, "We're known for fried pickles." I said, I don't know, man. I'm not in the mood. Oh, well, you really should try the fried pickles." And he kept going on about these damn fried pickles. And so we finally said, all right, let's go try the fried pickles. I mean, Frank are just dog shit tired. and it's freezing cold. Like this is like we might as well be on a different planet. It was so foreign to both of us. So he takes us to it's a decent looking kind of pub grub place, and he gets a big old plate of, I mean, pickles that are fried. They're
Fried pickles.
just fried pickles. There's nothing
Yeah.
there. So I go and eat a couple of them. He goes, "Yeah, man." I said, "Well, here, why don't you have some?" He goes, "Man, I don't want to eat those." I'm like, wait a minute. You're pushing us to eat these fried pickles and you won't even eat the damn things? But like you can go anywhere and you can go to Cincinnati, and why they put cinnamon on, spaghetti makes no sense to me. You can have your Christmas tree sauce down in New Mexico, and like all the different people that we met. I really love the opportunity for my wife to see some of the things that have been really special. And by the way, I kind of love the fried pickle guy. Like the whole thing was great. He wanted to share something that was cool, and I mean, I like that more than anything. So I think that's
Yeah.
kind of my next stage is kind of doing something similar to that.
Brother, that's so inspirational that yet my mind is sitting here wondering as I'm listening to you about, boy, wouldn't that be a fun, even if we did it for a year, like
Yeah,
just a year, wouldn't that be an adventure? And you're right, we can do our work anywhere,
anywhere.
anywhere. So, and that's true for likely anybody that's listening to this today are the loan officers that you can. We had a loan officer for a time being that ended up moving to Finland. And if I remember right, he was licensed for loans. It was either Georgia or Florida, but ran a very robust loan officer business from Finland
I believe it.
as a U.S. citizen, being out of, I'm pretty sure it was Georgia. And he did great. He did great,
Yeah.
and
Post COVID, and this was trippy. When I got back into loans, it really did trip me out because when I got out of loans, it was all about, face to face. And I wanted to get to see and know the people I was working with. But there is absolutely zero expectation to meet face to face anymore. And that was kind of hard for me to comprehend. I
yeah.
had to understand like how the world had changed around me. And because of that, there is no rhyme or reason where you can do loans or how you can do loans if you choose to. Like I have a guy in Kentucky right now. He's writing. I'm like, write loans in California. I mean, all right. Your average loan amount is $100,000. Write loans in California, they'll be $300,000. There's no expectation for that anymore. I think the whole cut. Remember, like when the Zoom stock went through the roof. You know,
Yes.
what it did was it facilitated an opportunity to take what was inevitable over a longer period of time and made it a shorter period of time. So we got to certain inevitabilities. The whole QR code thing, like people didn't use QR codes pre-COVID, but post-COVID, if you wanted to go to a restaurant, you had to go hit that, QR code with your phone. So it took a lot of things that were going to take place and it put it in front of us. I think really for loan officers is understanding, how things have changed and getting ahead of the curve will allow you to do the fun stuff, allow you to go ahead and succeed. How many loan officers do you know? Let me ask you this. How many loan officers do you know right now who are absolutely killing it today?
Not as many as it was 4 years ago, but a decent amount, but nothing like it was.
But that's kind of a culling of the herds, isn't it?
Yeah.
I mean, we're still doing a ton of transactions right now. And the difference between those who are and those who aren't are the ones who've figured out what the changes are, and they've
Mm.
they've gone and they've morphed and they've
You know what I've seen. You know what I've noticed, man. So, and we could do a whole topic on this, but we're not today anyway. I've noticed that some newer loan officers just getting in the business are closing 5, 10, 15 loans a month. Been in the business maybe a year, maybe. And then my seasoned pros has been doing it for 15 years. That was closing 25 are now closing four.
stuck in their ways. That's the
And
problem.
it's crazy. Hey, Brian, just real quick, somebody wants to listen to your show. What's the best way to find it?
Just go to mortgageshots.com, subscribe. We'll send you a video every day, Monday through Friday. It's, 7 minutes long that's going to talk about the industry, maybe give you a little sales nourishment and something to smile about. And that's it. And most importantly, we don't sell your information to anybody. Meaning that if you subscribe to us, you're not going to find yourself with 15 different emails. So we just want to be a positive beginning of your day. So it's mortgageshots.com.
Brother, I appreciate you. I love you so much. You've been a brother for a long time, and it's great. Yeah, great to see the success that you've had and have continued to have. And looking forward to the next episode. Looking forward to some postcards from Bismarck too, by the way.
Well, I'll probably be down in Naples before I go back to Bismarck.
Yeah, that's not a bad plan. Let me know when you're down there. I'll come down there and we'll do lunch one day.
Sounds good, Ben.
All right, brother. I'll see you.
All right, later.